stock of the day, IAG. In fact, this is off the back of yesterday's Investor Day that the company held. Brokers updating their moves on the stock as a result. Also, investors responding positively. In fact, the share price there hitting a 52-week high. It's up again today, in fact. It's on target to achieve its FY23 guidance, upgraded its medium-term targets, and it's confident that it will achieve its guidance of around 10% of gross written premium growth in FY23. Scott, insurers, interesting space to be in, but how do you look at IAG?
Yeah, it's fascinating, mate, because we've got, on one hand, really massive premium increases, desperately trying to chase down the cost of repairs in particular and replacement specifically. If you think about what's going on with cost of lumber, steel, labour, you've already talked about the unemployment numbers out this morning. These have been a really tough range of kind of concerns, issues for insurers to deal with over the past 18 months. And I think on one hand, so here's what I would say. Insurance pricing is not the same as, but not that different from commodity pricing, which is it's really commoditized, and it's very, very difficult often to get a proper handle on the long-term future. NRMA or IAG have talked about the NRMA brand and their hopes for price increases, the other brands as well, over the next 12 or 18 months. But whether that can continue post this is the big question, because at the end of the day, you are simply trying to make a margin on the collection of premiums relative to what you've got to pay out. You can only collect premiums above a certain level price-wise if your competitors allow you to, and vice versa. So we have periods of great opportunity and periods of tough circumstance. I would suspect that insured profits are probably pretty good over the next year or two as this high pricing cycle continues to roll through. Thereafter, I expect, as it always tends to be the case, pricing gets keener and keener and profits get harder to come by. So if you're a short-term trader, you might want to take a guess on what the next 6 to 12 months might do. I'm a long-term investor. I don't try and play the short-term game. So if you ask me how likely is IAG to make money over the next 5, 7, 10 years, given that volatile pricing market, I'm going to say I'm not entirely sure. I'm encouraged that they are getting ahead of price inflation. I think they seem to be doing a relatively good job of making sure things like increased climate risks are increasingly priced in. I'm not someone who believes that climate change poses a imminent and real threat to insurers who are doing short tail insurance. If you get to reprice your policy every 12 months, you can allow for that. I wouldn't want to take a 40-year policy now on the impacts of climate change, but a 12-month policy, you should be able to reprice it. So it's less about that for me, more about the industry dynamics. Really super competitive industry. IAG is one of the better insurers out there, probably the best quality insurer, I think, on the ASX. I don't love the price at 17 times earnings, though, even if they do manage to get slightly higher profits, again, unless you're trying to trade that through. As a long-term investor, I'd want a cheaper price. I don't think I'd probably run out to sell them. If you own them, a 2.6% dividend yield, you're probably a more conservative investor. Maybe you like the income, maybe you've got a diversified dividend stream. If that's the case, I wouldn't necessarily say you should rush out and sell the shares, particularly if short-term profits are going to be better, but I wouldn't be buying either. Probably a solid hold for me.
Yep, calling it a hold. All right, good one, Michael.
Yeah, generally similar points there. So, I think that, look, they've had a great run for 12 months. Longer term, it's been a poor investment, but if you've managed to get it in those 12 months, you've been in the sweet spot. And I think the share price can continue trending higher, but I think, we've seen the better part of the gains. And as Scott mentioned, it's not cheap anymore. So I think as a hold, I think you could continue on and see a little bit more upside, but buying it at this point is a bit risky. I do believe competition can increase down the track. And look, with insurers, I've never been involved with insurers because they're always one natural disaster away from having an issue. So look, I think with those risks, the price doesn't factor in those potential risks. So look, happy to hold, but buying up here is a bit risky.
Do you agree with Scott? Do you regard it as the best quality insurer?
Look, to be honest, I haven't ranked them because I just don't invest in them. But
so you're still.
But if I was to compare it to QBE, I mean that's been longer term.
All right.
That's been a bit more of a basket case, that's for sure. So look, I suppose if I had to pick an insurer, it'd be IAG, but it'd only be to hold. I wouldn't be buying it up here.
Yep. All right, that is a double hold then for our stock of the day, which is